Hello, welcome to the class again. Dr. O here. Today I'm going to talk about tax system. Well, we going over taxations and several way of public finance and some kind of work from the government. Government doing a public service and especially public goods cases, government need to providing the service because other than that it is not provided properly in general situation and private market. So last time we looking at the characteristic of four goods, and under the public good cases it is really hard to making social optimum in the categories of public service because the property of goods doesn't hold like a private goods. So under these cases, government need to providing the service, but they need finance. So they need to find out how to get the expenses of public service. So this tax system or taxation itself is funding the public services, the cost of public service. So under the perspective, government itself, public sector itself is not profit, pursuing agent. They need some, jobs to providing the service, but they don't earn any money out of their service. That's free in general. So in other way, they need to get funded out of it. And what is the main source of their finance, which is obviously taxation? Well, in that perspective, we are going to looking at what kind of characteristic and property is happening, or what kind of thing we need to consider for the taxation system or tax system. So today's topic is like that. This one, especially this topic, is a specific topic, as in old days economics we call this public finance. So how public sector financing their expenses and how to providing their service on their purpose. But now it is changing to like only for not for the finance perspective, but for all different type of aspects they need to consider. So recently the name changes to public economics. So public sector, what type of thing as a government, as a economic agent, what they need to think and what they need to figure out the issue inside of that. So we call it and we research on the topic as public economics. So this, tax system itself is the starting point or brief, guidelines to start public economics topic. So one by one, as a simple foundation we need to build up today, and then later you can go further to looking at the discussion of public sectors or public economics later in each one of the specific topic later. So let's see one by one. Today, what we are going to looking at is mainly we already knew about this. I mentioned several times. What is the main source of tax revenue? Well, tax revenue cases or taxation cases, there is a lot of other aspect of it, and if you're looking at it, each country have a little bit different feature, but generally the lines or the logics or systems is similar. So US, Korea, yeah, most likely you can understand the theoretic perspective, that's the same. But majority part of revenue from the tax side, tax revenue itself, yeah, most likely composed with income tax. So yeah, as far as I mentioned, and also we're looking at the income tax perspective. We didn't going through about the income tax itself, but still we need to looking at the taxations, how it is working or impact on the markets. So we looking at the income tax perspective. Yeah, income itself can be separated as labor income and capital income, and under that income, how much a percentage will be taxed on it. So that makes economic activity, reducing or discourage to individual agent in economy. So that is a huge impact on it, but still the main source of tax revenue composed with income tax. So those things, what do we need to looking at it under that main source, and what is the philosophical foundations or logics to building up what type of characters and what type of property we need to consider to determine how we can tax on those income lines. Well, so far what we're looking at is, we're looking at the general market as goods and services, private goods and services, and when we transact it, and government feel that need to discourage of transaction, then we can impose tax on it. Which side we learned about the incidence, right? It is directly determined, or relative elasticity of demand or supply will determine how much burden will go through to one side or another. But all those things are observed in these lines. Well, income tax is not that big difference because we looking at the labor income perspective, labor market, we looking at it. That's exactly the same analysis as long as we change it to the goods and services to labor market. So in that perspective, big jump in a way, like just we are very comfortable to thinking about goods and services in general cases, but now we income tax analysis, we need to look at the labor market. So labor market, we supply our working hour and we're selling our valuable time, and then company or firms producer, like a goods and services producer, will demand our labor. In the perspective, opposite side of supply and demand as an individual perspective. But once you understand that, there is not a big difference from analysis or logic of we analyze. Next one is efficiency. Well, generally, private market transaction is under the competitive market assumption. There is no intervention in the market, then we can get the most efficient solution or most efficient consequences coming out from the private market equilibrium. But in this case, we need to pay something as a deadweight loss if tax is imposed. So we're starting with the competitive market. If there is a government policy or economic intervention, then it automatically generate deadweight loss. Deadweight loss means that we lost certain amount of efficiency. So how we can measure it? What is a good thing about it? Under what cases we need to tax or imposing tax on certain case and scenario? That is involving issue. We need to discuss today. So efficiency, how much efficiency we need to give up to deliver certain purpose, right? So those can be, asked, and then we try to answer that question. The next one is, always we come up with these two big terms conflict each other. Well, in other words, we can say that's a trade-offs relationship. Especially competitive market, we try to maximize efficiency, but it is going for a long time. What can happen? And in general, the consequence is equity issue. We observe in history, we pursuing competitive market cases, and that market system goes on and on and on. The efficiency level is higher relative to the other system. Obviously, we can think that logic, that directions. But the issue was we cannot tell so far properly with the equity issue. So if we are keep, focusing on or put on the weight on the efficiency side using the competitive market, in intrinsic socioeconomic status cannot, dynamically change, and it's stuck with it. And somebody who is rich staying rich, and somebody who is the poor staying poor. or the gap between the poor and the rich is widened and widened, and it is kind of consequence right now we experience that political polarizations. So under that, yeah, that is not the problem at all. It's as long as it is efficiency. The aggregate level of wealth or GDP level is increasing. Economy grows, efficiency is delivered. What is the issue? And government reallocate all those additional surpluses in our economy, and that is fairly distributed or allocate to the somebody who need some help, then everybody in that society or country agree on those rules. That's no problem. Efficiency is maximized. But the thing is, it is not just can handle with perfectly um, complete information. Somebody does hurt because of those kind of equity issues, and somebody dream big, but systemic problems, right? System itself has a problem. We cannot easily solve, and those thing and a big gap between them is widened and widened. The total system is unstable. That's a big issue. So before COVID, before 2008, great recession time, we keep on focusing on this issue. But suddenly, topics and all those concerns changed to financial crisis, and after all, COVID, and now inflation issues. So this topic is a little bit less, interest at this point, but the problem is still there and getting bigger and bigger. Once economic turmoil is coming, the gap or the generally the somebody hurt has more suffering relative to the richer. Well, it necessarily a correct statement about it. There is not like research constantly agree on those consequences, but think about it. Everybody is suffering, but the level or the hurts or the cost or the difficulty is more hit on hard to the poor side. So we need to keep thinking about this, and system under the system how we can fix them is really important issue. So during this time we will slightly touch about those topics during today's lecture. So mainly today we are dealing with government role, right? Government intervention is necessary. Well, that's our continuous discussion from previous 2-3 chapters, right? Government need to providing public good because it is not social optimum. We just looking at private market can solve these issues. Public goods cannot be provided by the private sector, and it is necessary for society or community. So providing public good is one big important role to the government, but it is the financial funding or public finance is necessary. How we can get it? By taxation, right? And all other things, if market failure, one is externality or common resources, if we are not intervening them, the common resources will deplete it eventually. So those things, regulation or keep an eye on it, how to solve that issues need to be that service or providing that goods necessarily by the government or government intervention is necessary. So all those things, market fails, right? Government intervention is necessary as far as we learned. Under that service or under that category, we understand that the necessity of existence of government, economic policy, right? Well, it is a totally different issue. The existence of government or what we can expect from the government, not only economic services perspective, economic activity perspective, but today's or our topic is limited to the economic perspective. So even economic perspective, we need it, right? Externality issues or market fails, under the category of common resources on public goods, those categories, government intervention or government economic policy is necessary. So under that understanding, we need to look at one by one in it. So there is a lot of function of government, but that service we understand that is necessary, but how we can provide them without fund. So we need a fund to providing public goods and services. Then what do you need? Yeah, financial, activities are necessary, economic perspective. Then how we can do it? By taxation. So under that point of view, and we are looking at, we accept that, that foundation, and then we build up or think about and discussing about taxation and the tax system, how we can build up. Without that much thought or discussion about why do we need a taxation, I just slightly mentioned about it, but we understand government services because of one reason, market failure. But once tax is imposed, there is loss of efficiency. Originally, private market, we didn't intervene as a government perspective, then the efficiency is highest. But once taxation is happening, then loss of efficiency. So tax burden, right, and deadweight loss, those things are happening. We already learn about that. And welfare measure like a surplus, social welfare or economic surplus, we can calculate the area, and then we figure out how much deadweight loss, size of it, and we calculating that triangular area, or sometimes it changes if it is nonlinear demand and supply function I mentioned. Like that, we can measure it, right? That can be the criteria to determine what type of thing we should do and how we can build up economic policy under certain situations. So obviously we understand that there is data loss and efficiency loss is happening if we, impose tax. Now we are looking at the graph right here. This is tax revenue 2020. Data is downloaded from the OECD. So OECD data, and I using the OECD providing the tool, and I copy that down. It is 2020, the recent data. So this is a percent of GDP. So each percentage is reflecting that the tax revenue of each country divided by their GDP. So it is well known Denmark has most tax revenue, and the European country has a higher rate percentage of GDP can be collected by the form of tax. So number one, Denmark, France, Belgium, Italy, correspondingly like that. Germany is still high, and there is not in the middle, but a little bit lower than that. There is a black bar, which is OECD average. So this is 2020 tax revenue, and we're looking at the Korea way down there in the 1/3 area, less than 1/3 side of it. Less than Korea, the tax revenue percentage is the United States and Turkey and Chile, Mexico, Colombia. Mexico is the list number one, and the percentage is 17 to 18%, and US is slightly higher than 25%. Korea is higher than 25, 27, 28, that range. And OECD average is more than 30%, 32, 33%, a little bit higher than that. And Denmark is more than 45%. We're looking at the real life data right here. Next one is, I did a mark of each one of the country, but you can see this one is coming out from 1965 to 2020. So as far as you compare with the last graph, the 2020, the mark of percentage is linked up with that. So corresponding number one and list number one and second, third, and correspondingly you can find which country is approximately belonging to that lines. But general trend was, yeah, relative to 1965, the role of government is bigger and bigger, and we realize that those kind of services like, using the tax revenue to giving out public service is necessary, and each one of it. And trend itself is changing, or concept and the total citizens agreement can be changed, and the volume of public services is getting bigger and bigger. The trend can be interpreted that way. So this data is 65 to 20% of GDP is moving. Yeah, each lines of it is representing each countries. So we saw that general trend of worldwide, yeah, it is focusing more on the OECD country and the average of OECD. We're looking at it. We know that more social interest is heavily focusing on European side relative to the US. US economy is more like private sector interest or focusing, market system relative to the European country. European country is more socialized, and nowadays all the system is modified. We accept different side of the idea and philosophy, but still, U.S. is market-based country. Surprisingly, Korea, relatively, we're looking at the issue socially. I personally believe, and some system itself is more focusing on social policies from the government. But as we looking at the percentage of it, Korea's tax revenue percentage per to GDP is not that high relative to the other country. So tax rate, yeah, some political slogan said we are high in the tax rate, but actually it is not very tax revenue itself perspective. We have relatively low, even though it's a higher than U.S. and but a little bit less than Japan. So basically, our economy itself doesn't have that much tax revenue, and public sector itself is not that big relative to European country. So we have a lot of other things to agree on, and changing of tax system itself and moving forward to more social security based of the policy to going toward that direction. We need a lot of work on it. So next one we're looking at is tax and efficiency. We obviously, one lines of summary of this topic, yeah, we can say that tax reducing the efficiency of private market. But tax is necessary to support or to providing government roles. So even though we know that we're losing some efficiency, but we need it to providing public goods and services and some kind of redistribution or reallocation of wealth and incomes or GDPs in the perspective of social safety net on social service perspective. But we can think of some kind of cost. So loss of efficiency we can measure by deadweight loss. But in other way, once tax system itself, we need to reform it, and we need to think about these issues. So there is a lot of other cost, which is if tax system is really complex, then there is a additional social cost is involving. Like you need to hire the accountant to think about and how to report your income and annually, and those social cost is involving. And the collector perspective, we need to think about right way to collect or taking the tax out of general public. In that cases, yeah, administrative cost is involving. So it's both side, government or authority need to find out the right source of incomes, and then how many percentage of it will be taken to as the tax. They need to calculate it all the time, And those things are all involving the cost, and then makes efficiency loss, right? Without there is no considering of tax, then there is no such a concern about it. But now we started to tax on certain activities, then how we can measure that, and how much we need to collect from that income sources. Then yeah, that we consideration its authority perspective and how much I need to report and I need to pay for it. So those administrative cost is always involving. Deadweight loss by taxation is also another cost. And yeah, transferring the amount itself is also, yeah, we need to consider about all those changings and the calculation. So in that perspective, we losing some efficiency, additional work and additional cost is necessary to doing some taxation. First, we are looking at the efficiency lost as a deadweight loss. Let's looking at deadweight loss perspective. First of all, the deadweight loss, where is it actually coming from? We need to think about. So we believe that by taxation we're losing efficiency as we calculate it. Oh, this will call the deadweight loss, and there is some efficiency lost by imposing a tax. Then, why is that happen? Actually, what is that the reason? Right? That is a good question to looking at it. And basically, we interpret that as lose or changing of or distortion of incentive. So generally, in the private market, there is no such additional intervention is happening. Then many, the number of transaction is higher than, without the taxation. So the tax itself making that much, the quantity, transacted quantity itself, equilibrium quantity will be reduced by tax. That's general conclusion. And that amount is, in general cases, without intervention, people will consume that much and transact that much. But tax is negatively impact of their activities. Their incentive, they're willing to pay, will be reduced by it. So there is a willing to use, a willing to consume is right there, but taxation will reduce that amount. So that is a main driving force of making a deadweight loss. In other words, taxes distort incentives. So without tax, people try to consume more and produce more of it. That activity will be reduced by taxation. That's main driving force of efficiency lost. So, yeah, we as far as we look at and calculating the deadweight loss is measured and considered as loss of efficiency, and also we can think of that as happening by distorting the incentives. So another argument about taxations, as far as we mentioned that income tax is a majority of tax revenue, but there is an argument about it because labor, so incentive to work hard. I work hard. I try to make my income higher, but it is distorted by income tax. It's how we can setting up the income tax regime. There is a whole different type of it, and we need lots of things. Lots of things we need to consider to setting up or to making a tax system, income tax system. So there is a lot of distortion, and there is a lot of data loss out of it, and especially we can see that because of the tax, people used to work certain amount of working hour, but now because of tax, they don't work hard. So that diligent, purpose, voluntarily work hard, and there is some kind of action and renovation is by far by working hard, we can create it, but tax system itself can reducing that on that activities. That's really, additional data losses happening in the labor market. That's not good. So people come up with a different idea. Instead of income tax, why don't we just taxing on consumption tax, sales tax, value added tax? But that is a directly impact on goods and services market, and sometimes harmonize taxation of all the goods and services is not good. Sometimes some certain good is a necessity because some any people need it. So low income family can be affected more relative to certain other income groups. Then that is not fair politically. That is not not good for like wealth distribution or equity issues. So there is a lot of argument about it, and still we cannot fix or changing those tax system itself. Politically, it is a really hard thing to do, and making a really good tax system itself is mathematically, impossible. It's really hard, even though we know we discussed before like that, right? Even though the data is more and more, and we realize that that essential data set exists, but aggregate levels and also some changes is happening, the outcome or consequence is anyway we can expect. So it is really hard to deal with it, and that is additional discussions happening in the later part of it. But let's see one by one as example. The income tax reduced the incentive to save. Well, and working hour perspective, on top of that, there is a lot of other impact on it. If the income tax is higher, then they don't want to work hard is one thing, and also it is giving out the other aspect of it. Well, saving itself. If your income is really high and or a certain level, and then we want to stabilize our daily living. So the income itself, exactly we analyzing in economics, why do we need income? Why do we need salary? So simply speaking, human beings or consumer perspective, individual perspective, we make our happiness higher by consumption. But we are not living only present. We are from the past. We are living right now at the present, but we will live in the future. And we don't know the future. And we don't want our life in future looks miserable. We don't want it. So we want to save. So certain amount of income for our safety, we need to save. But income tax is higher, and all other, pensions, annuities, all those system is built up, then, the incentive to save is reducing by those systems. So we observe some European country have those good, social safety net, doesn't have not that many, saving rate relative to the other country. So if the government or public sector providing those services, saving rate is low. And saving rate is low. In other words, there is not that many capital accumulation is happening. And then that kind of investment is not that many in the perspective. So growing economy in that case is, there was somebody who has, more income relative to the past, and they prepare to the future, and they don't have public safety net or social safety net about the future. They privately providing by themselves, so they save more and invest in certain private sectors and their own interest, and that is used for the investment, and the production process will be going on or fluent with that directions. But actually, because of the higher level of income tax, reducing it, so distort the incentive to move that directions. That is a huge issues. But yeah, here is some good examples or simple examples. Income tax rate is 25%. If that is 8% of interest rate in financial institute, then if you save, you will get 8%, 8% of capital income. But capital income tax rate is 25%, for example, then actually after tax, your capital gain or interest you gain will be changing to the 6%. Well, that's only 2% change. Yeah. If the base is small and the number of years is small, that is not a big deal. But it is compound over time. That is really trouble in the long run. So there's not that many saving involved, and there is no investment, and there is no driving force to economic growth in that perspective. So yeah, even Albert Einstein, right, once said that the most powerful force in the world on Earth is exponential. So yeah, interest rate and the future value of finance itself is calculated by the exponential function. It is 2%. Yeah, you base money multiply 1.02 to the power of something. To the power of to something. Yeah, it can be like a yearly interested. Yeah, 1 year is long and 2% is not that big, but 1 year, 2 year, 3 year, 4 year, as time goes by, it is doubled, quadrupled, and huge amount of it. The function itself is, as you're looking at it, that's crazy as go further and further. So that's important issues. Income tax is those kind of issue we, need to consider. So in that perspective, economists are believing that, wow, yeah, let's go for the consumption tax instead, right? Consumption tax doesn't have, doesn't touch with the incentive of saving, then that's better. As long as we collecting income tax and then building up the annuities or pension systems, all those other things. So there is a lot of other side of it, like a certain account they provided, and then as long as your salary is going on, put aside a certain percentage of it to making a pension, and the pension publicly invest a certain amount of it as public finance. And those institute, well-trained financial analysts working on it. All those things can be possible. But yeah, initially, what is a good thing about it? Somebody who under the benefit has a benefit, but other side will hurt out of it. And also other side of it, consumption tax in that perspective, value-added tax is, it is one way of consumption tax. But consumption tax itself is, as I explained before, certain section or certain product, we impose a tax on it. But if it is a necessity, it is not fair to getting all the same rate of consumption tax, and administrative, cost is higher if you select out of, list of consumption tax or outside of a consumption tax. That is a huge issue. Even we have more data and numbers relative to the old days. And also we cannot just directly dispose income tax right now because majority of tax revenue is coming out from the income. Next one is another side of efficiency loss. I just mentioned about this issue too, administrative burden and administrative cost. So yeah, in reality, tax system itself is very complex. Even their expert has a lot of issue to understand of it, and there is a loophole to avoid the tax. And somebody who hired really, you know, capable expert about tax regime, and they find out the way how to deal with it. As long as legal, registration is not building up clearly, they used it as a loophole, and they take advantage of all the time. Even though there is a loophole, yeah, there is a lot of other the effort to changing it to the right directions. It always have those kind of tax avoidance and those legal but some kind of fishy activity is going on. And in public general, always think of it, we does have, in reality, tax system is not simple at all. So every year I need to do some income report, tax report, but that is not easy. Nowadays there is a lot of software to help us, but sometimes you don't understand the terms of tax and mistaken it, and once you did it, you need to pay some charge on it next time, and your benefit of certain area is gone, if you don't know about it. So all those things are social burden, or everybody suffering with that. In general, yeah, you need to have headache and additional time to preparing the tax report, and that is not easy. Even though you ask to the expert, we need expert, then we need to pay for the cost out of it. And those, complexity, there is a huge benefit who knows the loopholes and use or take advantage of it is always happening. Now let me talk about a little bit different topic. Now I'm going to talk about the marginal and average. Well, the concept of marginal is coming out from the calculus concept, which is a derivative. So marginal means when one variable change 1 unit, how much other variable impact by it. So the slope in 1 point, yeah, as long as it's a linear, but the slope itself is just 1, it doesn't change at all. But if it is a curvy lines, it is always changing. But average itself is based on total number out of change of total number, right? So yeah, 1 point to the another point and draw the line, and then you measure the slope. That is nothing but the average. So in 1 point, point 1 to the point A to the point B, and you calculate the slope out of it. That's nothing but the average. But marginal point is when you draw the graph or a function and you measure in the specific 1 point, and the tangent line, which is touch that line, the slope of that tangent line is marginal. In other words, in bubble explanation, marginal means once the unit changes by 1 unit, and then original variable change how much, we can measure it. So tax rate means that, let's for example of income tax, then additional $1 of increase in your income, how much percentage of tax you need to pay is marginal tax rate. But average tax rate is you earn $1,000 and you need to pay tax $100, then 100 divided by 1,000, 10%, right? 10% is that average tax rate. So those things, why do we care about this? Well, it gives you additional verification of certain tax regime or tax system. So in other words, the total tax paid divided by the total income, right? We are looking at the income tax at this point. Total income as a denominator, and tax, total tax you paid out of the income is a numerator. That's nothing but average tax rate. That is another way we measure the sacrifice. So about total income, how much you sacrifice to the government as a tax amount. Marginal tax rate, extra taxes paid on additional dollar. Like you earning $1,000 and now you are earning $1,001 at this point, and how much percentage you additionally need to pay. Well, it is changing in real life. It is not exactly the same tax rate is applied for the first $1 to next $100,000 and then $1 million additional you are earning. Well, there is a bracket or certain range has a certain amount of or percentage of tax rate is in reality we come up with it. So all the tax rate for the poor or certain income level is not exactly the same all the time. If it is the same, yeah, that's a flat rate, but actually it is not. And tax system itself is not easy as a mathematical we are looking at it. So in that cases, it gives you marginal tax rate will give you the incentive distortion of incentive we can measure. So additional one more dollar, like you are saying, more reasonable examples that you graduate the college and you are starting with the $300,000 as annual income, and suddenly your income is a rise to the 400,000, but your income tax rate is higher. Then you don't want to go for like 350 or 380 and the bracket changes suddenly, then you will not work hard to the extra money of the overtime or all other income other income source to put your working hour on. So that distort incentive. So in that perspective, many marginal tax rate will giving out the good understanding of it. Well, without those distortion, one good idea is lump sum tax. So incentive can be ruined or distorted by certain rate changes in certain levels. So yeah, bracket or income interval like $100,000 per year to $200,000 per year, for example, 10%, $200,000 to 200K to 300K is a 12%. It is separately moving on like that direction, and certain point you don't want to work more to pay more percentage of the tax. That giving or distort incentive. That's what they're saying. But if tax is like this, lump sum tax is the same for every person. So counting the head, number of head, and then paying for it. So lump sum tax is $4,000 per person, right? Then let's say that income tax perspective, right? Income is 20,000. The person is just a 4,000, right? Their average tax rate is 20%, but your income is changing to the 20,000 to the 40,000. The additional payment is not necessary. Just one person paying $4,000. That's it. One time, certain given amount, a fixed amount. That's it. That's a lump sum tax. There is no additional distortion of it. And yeah, income tax perspective, 40,000, and then you pay 4,000. Then that's average rate, yeah, 40%. But marginal rate is a 0. So yeah, lump sum tax doesn't have any incentive changes, so that's good in that perspective, but unfair. So the poor pay as much as rich, and the percentage perspective, right? Relative to the income, the percentage of the poor pay more than the rich. So that's not fair. So this fairness can be measured by equity. So this equity, how we can determine it philosophically, and what is the right thing, what is the justice, is another question we can have in our mind. So yeah, there is a lot of issue with it. First principle, second principle, the benefit principle is first one. benefit principle, the idea that people should pay taxes based on the benefit they receive from government service. So yeah, that's obvious. It's easy to think, right? So somebody who have a benefit, really big benefit from the public services, need to pay more. So in that cases, we are using the certain amount of or certain specific goods or services, and the benefit we measure that, and then by doing so we can pay for it. So benefit principle, somebody who get the benefit need to pay on certain usage of it. So gasoline tax or using the public road, by doing so we need to pay tax on it. But another principle we need to think about is ability to pay. So this one is equity issue, huge involving on it. The idea that taxes should be levied on a person according to how well that person can shoulder the burden. So somebody who have ability, right, ability to pay, need to pay tax. But we think that the paying of tax amount is individual sacrifice of their income. But that sacrifice should be equal. So equity, equality in that interpretations. Equal sacrifice. So somebody who is equal in certain level need to pay exactly the same amount. Equal sacrifice principle. So yeah, under the ability to pay perspective, and equal sacrifice is necessary, but how we can measure it and what is the guidelines of it is really important questions. So yeah, justice and equity. Yeah, what is the right thing? What is a justice in certain cases? We need to think about it. So yeah, two lines of equity is we can think of. First one is a vertical equity, and one is a horizontal equity. So vertical equity is, somebody who have higher ability. Income level is higher, need to pay more tax. Income level is lower, you need to pay less tax relative to others. That is vertical, like somebody is higher income, need to pay high, lower income, need to pay low. So vertically we aligned on it, and then burden itself can be, determined by the ability to pay. Horizontal wise, if there are same amount of income level, right, similar ability to pay tax, then they should pay similar. But it is really hard to measure this in horizontal cases. Well, somebody doesn't agree with the vertical, equity even, but that is relatively easy to decide. And another argument is how much we can put on the difference on it is another agreement we need. But horizontal one is really hard to find out. Somebody who have labor income is 50%, capital income is 50%. Somebody who has labor income 100%, there is no such a capital gains. Or somebody doesn't have labor income who has 100% of capital gains, who need to pay more. Oh, their income is similar as a horizontal equity, then they need to pay exactly the same thing. That is a good question, right? And how we can agree on those cases. So yeah, all those single small, differences in reality makes this kind of, right tax systems at once. Today we are looking at the tax systems. There is not just based on economic theory, but also you need to understand the larger political philosophy, and also some kind of value judging method is necessary, and looking at all different aspects of in real life the situation or surroundings and circumstance is different as an individual. Under that cases we can generalize these cases and setting up the right play rule to running the economy is another issues. There is a really big discussion and argument in this case, but there is no such agreement and one lines of it. Each customs is different. Its country's history is different and individual. And as time goes by, political trend can be changed, and economic system itself it changes, and the interest itself can be even in a certain perspective. And the booms and recessions, and by changing of it, people's mindset changes and level of income correspondingly change too. So there is no certain exact rule out of this foundation. But clearly one thing is efficiency and equity is a trade-offs relationship. We argue more on efficiency, which is a private sector market system is better and we're running for it, then equity issue is accumulating. And the problem is getting bigger and bigger. We couldn't deal with it properly under the system of market so far, and that makes equity issue getting bigger and serious right now we are experiencing. So trade-off relationship with the efficiency and equity, and how we can deal with this, how we can harmonize these two concept as better result. So as far as we are looking at the theoretic point of economics, but we need to understand and look around and think about your political foundations and your situations and your future as a citizens. How we can deal with this is a really important issue. But yeah, we can help or make a better suggestion for making a better decision under this, how to handle it, efficiency and equity. So until today, we are discussing about the government sector. Yeah, it is belonging to the public economics. But next time we're going to move on to the more theoretic perspective as a producer theory. That's more theoretical relative to like real life examples and all those things, and political consideration is necessary in this chapter. So we are almost over those kind of consideration. Next time we are going to discuss about more theoretic foundation of producer theory. I hope you enjoy and have a good week, and see you soon, everybody.